Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
How do you decide which one's most important? Well, I like to call the Greeks the risk gauges. So whether I'm looking at delta, gamma, theta, vega, or rho, any of those, I look at them as risk. So when I'm driving an automobile, again, I'm actually looking at how fast I'm going, what's my temperature like, oil like. Same thing when I'm trading options is, well, I'm going to look at how much delta do I have, and then, how much can I take? How much risk can I take? Sometimes it's how much gamma can I have. Again, gamma is nice when you're long it, except you have this time decay that goes on the theta, so you got to balance those. Vega is going to measure changes in volatility. So there are a lot of different things, but start slowly. Delta is probably the most important, Greek, and then followed by sort of your gamma and theta. Vega is important, and your rho. So there's a lot of things to look at. Dollar Australian dollar is actually, as you see here, this is a dollar relative product, so the U.S. dollar was sinking for quite a while. Then, sure enough, a little bit further. And what would happen eventually? The dollar would actually spring back up. So the dollar would rally back up. AUX actually moves much, much higher in what Steve Meizinger would call a parabolic move. So AUX, take a look at AUX. Well, it starts to actually rally, and there you go. A huge move there where the dollar just exploded there in mid-July, and we have almost a 90-degree angle. So that's amazing, and that really, it's one of the benefits of options is you have limited risk. So, again, were we predicting this? No. I mean, you have this downtrend, but, again, options give you the ability to limit your risk. So if you were an Australian citizen, if you will, and you saw that your currency was gaining ground, well, you know that these options are available at the ISE, so you can actually buy a call option and say, you know what, this is just a hedge in case, my overall assets, my Australian assets, if the Australian dollar starts to weaken, I have this call option will benefit if the U.S. dollar strengthens. And again, we saw this huge rally, and we've seen recently, the last couple of days, the U.S. dollar give it back a little bit. But again, the symbol you type into your broker would be, depending on your broker, for some brokers it's actually $AUX.X. Some of them just basically it's AUX. The symbol is really AUX. Then you have this $, and .X for some brokers. Just sort of this normal nomenclature, I guess, if you will. Dollar, British pound, what's happening here, or what happened in the last 5-6 months? Well, June 23rd looks like, we're sort of in a neutral pattern there. BTX sort of bopping around, not doing too much. And again, even then, the dollar rallied against all the majors in that same July period. So we rallied from around 48-ish to maybe 52, 53. Actually went as high as, I apologize, over 54 there for a while, 54.66, so a tremendous run. So, it was such a big move. And many of you probably ask, and I'm going to take questions at the end. The idea is, which moving averages? Steve Meizinger from OTA was using certain moving averages. Which ones are best? There isn't any best. Over the weekend, I was in Toronto, somebody said they used 1334. Is that the best? Or no. But again, you'll find the one that you're most comfortable with. And this is a 30-day weighted, so, many people do use something like that. Gives you a sort of it's an intermediate way to look at it. And this is a weekly chart, so this is, definitely a little bit longer term picture. Dollar, so this is the dollar pound. And we see that it's a huge, very, very steep run there, where if you had bought any calls, you see the breakout is around 51, let's say 60. And if you had bought the 53s, 54s, 55s, 56s, well, you probably would have done well in any of those. Obviously, very steep angle. And if you had bought calls, you would have done well. Now, the problem is, if we stayed in that neutral trend, if we bought the 51 calls and we stayed in, let's say, the 49 to 52 range or whatever, those calls wouldn't have been done very well. So that's what you have to think about as an options trader. So you're looking at your underwire of the FX market, in this case is dollar-pound, but then you have to think, well, what is the premium, and do I think the U.S. dollar, British pound will make a big enough move? And again, when you're trading options, it's not only about direction up or down, but you need to think about magnitude. How far? You really need to think, is the option premium worth it to buy? I mean, it's up to each individual investor. Many like to buy options, many like to sell options. And there isn't any one inherent strategy that's better than another. But again, you want to monitor your risk. Think of all of us, all of us that are here today. You're basically a risk manager, and OTA is going to help you do that. So again, you can always go to their website. Being a risk manager is going to basically help you learn more about how you can control your risk, limit your profits, try to protect your profits as best as you can. So the Australian dollar had this parabolic move, just like the British pound, although obviously the AUX had a greater dollar move. Well, it is a higher priced value, right? $100 value versus, let's say, a $49 value. So you could have, of course, leveraged up and created that $49 value. You could have bought twice as many options and probably got a very similar move. So it's up to you. Is that something I would recommend? No. It's really up to each individual investor. How much risk are you willing to take? What do you think the rewards are? And again, think of the worst case scenario. Worst case scenario is that whatever you put into the trade, well, it's quite possible that you're going to be completely wrong and you could lose your entire investment. So you could use Fibonacci numbers, of course. Again, as you become right, you can sort of spread into it by selling another call. So you could have bought the 52 calls and then sold them. Or you could have actually bought maybe a higher put, a 55, 56. You could have sold the 56 call. So there are a lot of different ways to look at options. In fact, there definitely isn't just one right way. Hundreds, if not thousands, of strategies that can work. Let's go forward. So that was an amazing move there in the BPX, running up to 56. And as I said, I think as I signed on, BPX was about 54-ish, a little bit below 50. I think it was 53.84. So closed the gap a bit. But again, what's your view? Is it going to get all the way back to that breakout point of 51.5? Maybe, maybe not. Again, that's what makes trading is you and only you can decide what's right for you, for your own portfolio. So let's look at the Canadian dollar. Hedging is very important, and OTA can help you with that. So, I like to say all my years of trading, why did I become a better trader? Well, I got better at sort of managing my risk, trying to make sure that I cut my losses as best as I can and try to let my profits run as best I can. Not being completely greedy, you can't wait forever, but finding logical strategies that would help hedge you, whether it's selling an upside call against a lower call or maybe quite possibly buying a put. So there are a lot of different things, and groups like OTA can really help you with that. So let's look at the Canadian dollar. As of June 23rd, you see that we had a basic U.S. dollar crash last October. And for those of you that follow candlesticks, you see that hammer. That's a very powerful candlestick formation. So at least that's what my friend tells me that follows candlesticks very closely. And you see that obviously the U.S. dollar just rallied very strongly, up from, let's say, 92-ish, all the way up to about, 103 or something like that, maybe 104. And then it went neutral for many, many months.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.